my ADD kicked in. Thought it was a hawk, but it's a squirrel. Squirrel. You don't sound like a coon ass. Like, listen long enough, it'll slip out. Well, one day is Thursday, June 12, 2025, and this is the week and charts. I'm just going to thank all you guys and girls for attending. I know I've been doing a really poor job of getting the word out. The shows are on most Thursdays. We're not doing one next week because of the holiday, but they're on most Thursdays, and they're now at 11 Central, 12 Eastern. All right, we're going to talk about, well, current market conditions, your questions on trading, the same stuff we normally do every week. If you have any stock or crypto picks you'd like me to take a look at, feel free to start punching them in now, and we'll get to the live charts. We'll get to there. We'll take a look at them. For the methodology in action, I have a couple of mystery chart updates. These are directly from my trading service. We'll talk a little bit about the Landry 100. I'm getting a lot of questions about that, so I want to flesh that out a little bit more this week. And remember, if you go in and watch the methodology in action playlist on YouTube, you can get a lot of information on a lot of things I talk about. And I know I tend to be redundant a lot, and people are like, why do you beat the dead horse? Say the same thing. Well, it's because I get the same questions over and over. So, but watching that playlist will help, and any other playlists too. So for many things this week, if you can survive this, you'll tend to do okay as far as catching some longer term trends, and that'll make a lot of sense in 1 minute. This is a disclaimer screen. As you know, you can lose money trading, or as I'll have to sum it up, all predictions are about the future, and a lot of stuff can happen between now and then. And I stole that from Greg Morris. There's all my contact information. Shoot a screenshot if you like. The newest thing would be the Substack. All right, let's talk about the mystery charts and the methodology in action. These are two straight from my trading service. This is TFPM. This is a gold company. As you can see, the big blue arrow is pointing higher, and notice below that's lots of Landry light. That's the lows greater than the moving average. That's the count on that. And you can see that it did begin to accelerate higher, and that's one thing that I like to look for in charts. Persistency, acceleration are probably the two biggest thing. Ability for the stock to trade cleanly, which is also a form of persistency. And this is really clean for a gold stock. I'm a little bit more lenient with precious metals and rare earths and on things of that nature, because they can be a little choppy. Anything commodity related can be choppy, but this is a really clean chart. Nice little pullback to the moving average. Notice the Landry light goes from 15 or whatever that is down to 0. Once it intersects moving average, it goes to 0. Like right here, you can see it was up about 20 something, and then back to 0. Again, it just counts the number of bars above or below, as you can see if you squint your eyes back here for downtrends. The moving average, pick your favorite. The 30 EMA is my favorite, and spoiler alert, I'm going to talk a little bit more about the 30 in just 1 minute. There's the parameters down below. Entry of 2150, initial profit target IPT of 2425. Total risk is 275. If you need a blank copy of the spreadsheet, I can give it to you, which it's based on a 100K hypothetical account. I do have a model account, so to speak, where I do take these trades, and I'll show you the actual trades. Maybe not this week on this one, but I'll show you an actual trade on another trade I took in the model. Anyway, entry was there, stop was down here, initial profit target was up here. So let's see what happens. It triggers, and then it kind of implodes on itself. And that's one thing I talked about last week, and that's about a $3,000 swing if memory serves. And it can be a little frustrating because you're in a position and all of a sudden starts going against you. You're like, well, maybe I should just get out. And the old me might have bailed out more quickly. The new me, especially with these things that I recommend publicly, it really forces me to hold myself accountable. And that's one thing that I was thinking about earlier. We're going to talk about an opening gap reversal trade that I mentioned earlier this week, actually yesterday, I think. And the whole time I'm trading it, I'm like, well, you know, I did mention this to my peeps, so I better do a good job with the trade. Doesn't mean I have to make money on it. It just means that I need to do a good job following the process. Linda Rasky, a while back, I was watching one of her tweets, and she talked about someone, and I forget the gentleman's name, but he was someone who had some trading systems, and he wasn't like, did we make money? Did we lose money today? He was more of the mindset like, how do we do today? Like, how do we do today following the process, good, bad, or indifferent. So if you make money and you didn't follow the process, did you really do the right thing? And that could encourage you to do the wrong thing in the future. But anyway, so you can see nice little move higher. We banged out the IPT on this one, and we're nicely higher today. Hopefully we'll hit some brand new highs. So there's the actual trades that I took. So yeah, I did have some actual trades in here. Anyway, I took a $900 profit on the first loaf. Ideally, you want to try to get to right about the $1,000 because we're looking for a 2% gain overall. 100K account, 2%, $2,000 overall. You take off half, so you put $1,000 in your pocket. Put a little bit less in my pocket this time. I use a little discretion, I think, on the IPT. But the real money is in the second loaf, and I hate to use the word hope, but hopefully this stock will continue higher, and then we'll trail that stop higher and be with it for a long, long time. Speaking of trailing stop, now we will trail the stop as the stock moves in our favor, even if the IPT isn't hit. But if the IPT is hit intraday, we bump that stop up again. As I say again, because I say this every week, but we bump that up to break even, and that way we have a free roll, so to speak, on the remainder of the position. Here's another one, another gold stock. This was not a mystery chart. I think I mentioned this one after it triggered, or it set up after a week of chart, so I wasn't able to show it live as a mystery. Anyway, nice big blue arrow once again. Not quite as clean as the other stock, but it looked pretty good. And one thing I liked about it was, one, it accelerated higher. And then, although this looks slightly bearish, making that minor double top, that's a pattern I call a double top knockout. And it's a pretty cool pattern because what happens is the market makes that double top, and ideally you want the second little minor top to be much higher than the previous one, and that sucks in more players, okay? And then when the market sells off fairly hard, it shakes them out and possibly attracts some eager shorts. And the predicament all these traders can actually help your trade along. Remember, my version of technical analysis is a simplified way of looking at things, and I'm just looking at what happened in the past in the charts and what was the behavior of the players and what will likely be their future behavior. So if I see a stock make a minor double top and they begin to implode a little bit, pull back, provided it's in a really good longer term trend, then I know that some shorts have been sucked in, some players have been knocked out, a la the double top knockout pattern. And I know that the predicament of these traders could potentially propel my position higher once I get a trigger, obviously. But anyway, you can see, once again, Landry light pullback 2 on this one. That's one thing that amazes me. I know I say this every week, but there was, I forget how many months ago, it was during a good period of time where we had a lot of winners. And I went in and looked at all the winners, and to my surprise, every single one of them was a Landry light pullback. And as I often preach, borrowing a line from the Nebraska, all you need is one pattern to be successful. And I think if I had to pick one pattern, that would probably be the pattern, provided, of course, you combine it with a little persistency, a little bigger picture analysis, make sure you don't have overhead supply, etc. Make sure the stock trades cleanly, and ideally acceleration, etc. But anyway, so it pulls back to the moving average, and Landry light goes to 0. It actually goes negative a little bit, but that's okay, because longer term it still looks pretty good with the 30 EMA. There's your parameters: 1450, protective stop 1250, IPT 1650, 2 points of risk. If you know your entry and your protective stop, then your initial profit target is just simply the entry minus the stop plus the entry. So in this case, we 2 points plus the entry, 1650, and that's calculated for you in the spreadsheet. So let's see how it shook out. Entry's here, stop is here, initial profit target is there. So it's doing okay. I'd like to see it bang out that profit target and beyond. It's having a pretty good day today. So it's up closer to 16 or so, 15 and change at least. So that's a good thing. Now, as I said a second ago, you don't wait until the IPT is hit before you move that stop up, although I did have a client in the past that has experimented with that. Clients have experimented with a lot of different things, and that's fine. I've just come up with a way that I like to trade, and I like to explain things and I like to follow things in a certain kind of way. And a lot of clients, well, what if we did this? What if we did that? Well, that's fine. Whatever you want to do, I'm just giving you the basis of what I do, and I'm also working to be very consistent in what I do. So if you wanted to follow along, you could follow along. And I've tried everything in the world. This is what I've settled upon, and this is what I'm sticking with for now. And like I said before, 100 times, maybe 1,000. Somebody was doing a due diligence on me, and they found a post from 20 years ago, literally 20 years ago, where I was talking about bow ties. And they're like, well, this guy's talking about bow ties today. And that's good to see. And he compared to contrast me to, and I'm not going to throw the guy under the bus. I like to, but I'm not. you know, I don't want to get in trouble here. But anyway, he tends to put out a system du jour, and these systems are very expensive. And every month he has a new system. And if you buy this new system, it'll be the only system you ever need. And it just begs the question, what happened to the system you were selling last month? So I'm pretty much showing the same stuff that I showed many, many, many years ago. All right, let's talk a little bit about trading OGRes. So this is AMSC, and I put this post out yesterday right before the open. AMSC potential OGRe. This is in my Facebook group. The group is free, but you have to be a member of DaveLandry.com. That keeps the riffraff out. Half kidding. Anyway, so at least I know one guy took it. Charles took it. He said, thank you. I took this one with 1 point for the IPT. That's exactly what I used. He just hit the IPT 30.15. In one account, I did enter a little higher, and that's right around where I got out. It took half, and I'll walk you through the trade that I took in the model account. Yeah, here's my trades right here, 29 to 29.25 with a 1 point IP2. Anyway, so you can see this stock was in a very persistent longer term uptrend, and those are the best. You can find a really nice persistent stock, and you want it to be banging out at least multi-year highs or significant highs, I should say, at the least. And then you're looking for that gap, and the idea is that the gap knocks out a lot of people, maybe even sucks in some eager shorts, and if the stock begins to reverse, once again, the predicament of those players can propel your trade higher. So on the open, and you have to be really careful. This is where it's really tricky. This is where there's no mechanical rules that you apply or anything like that. You just have to watch it open and see what happens. Now I'm showing you on a 5-minute chart. Over the years, I've graduated to higher and higher time frames for the intraday stuff. And I've also tried to do less and less of the intraday stuff. That's why I've moved the shows back to the day, because I was trying to just make much money as quickly as fast as possible, doing a lot of intraday stuff. And was really kind of out of my wheelhouse. I have a client, when he's hot, he can scalp, okay? I'm not a scalper, because I'm trying to hang on and take partial profits and ride the trend all day. So I know what I need to do. I know what my forte is, but something like an opening gap reversal to me makes a tremendous amount of sense. And even though I kind of preach against day trading, it's one day trade that I will occasionally take when everything sort of aligns like it did with this one. But anyway, so on the open, you got to be careful not to get too caught up in things, because you see it did sort of bump up a little bit, and it would have been really easy to get sucked in. As I've said before, one thing that you might do, let's just back this up. One thing you might do to avoid getting too caught up in the intraday or the opening gap noise, okay, is to keep an eye on that daily chart and maybe think about where you would enter on the daily chart as opposed to focusing too much on the micro. So you know, look at that intraday chart, but also look at the daily chart. And also, one thing I'm just kind of thinking out loud, you know, maybe when it comes to OGRes, maybe if you're newer to trading OGRes, maybe the thing you do is only trade the OGRes that show some sort of fake out first. That way you're going to avoid getting maybe sucked in on that opening gap noise, okay? So I'm just kind of thinking out loud here, and maybe this is something that we could flesh out further. because again, this one you can see it open here, but it did have that pop up. And I remember watching it start to rally. I'm like, oh shoot, I better get in, I better get in, I better get in. It's like, hang on a second, Dave, don't get too emotional here. Let's just let it shake out a little bit. It's only going up a little. Let's see what happens. And unfortunately, as you can see, it begins to implode. And that's when it's almost like a big sigh of relief. And again, maybe if you're new to trading the OGRes, you only take the ones that fake out first. It sort of reminds me of Kevin Haggerty, God rest his soul. He was a great guy. I tried going drinking with him once, Guinness 1 for 1, and next day he woke up fine, and I woke up not so fine. He was an Irishman, a super nice guy. But anyway, long story endless, in his office, when they got a new guy in, they would only let the new guy take the second signal. The early bird gets the worm, the second mouse gets the cheese. So it's kind of like a second cheese type of situation. So if some guy comes in, because you would end up with a lot of fake outs early on. Now, once you become a little bit more experienced, then you're willing to take those fake out, stop out, whatever the case may be, and then go for that second cheese type of signal or second mouse type of signal. But anyway, this is kind of reminiscent of that. So if this thing were to trigger, just going and blowing on the open, then maybe you would pass on that if you're new to OGRes. I don't know. I'm just kind of thinking out loud, and maybe somebody wants to flesh that out a little bit, and that might be a better way to trade these things. And I know that some cases it's going to open and go straight up, so you would have to be willing to miss those. But if you missed a lot of these fake out type of moves by maybe giving it 5 minutes to see if it implodes like this one did, you might miss a lot of losing trades. And if you think about it, if you miss a lot of losing trades and catch more winners, psychologically, that you're going to be so much more better off. Now, there is a FOMO, and believe me, FOMO is painful, and I actually call it POMO. The pain of missing out is when you watch something go up without you. This is especially true if it's something that you saw as a setup and you intended to take, it didn't take. FCEL, boy, I tell you what, and I admit a lot of mistakes to you guys, and that was one that was in my Landry list, and it was a little too volatile or whatever the case may be. It wasn't quite perfect, but I did like it, but it was too, again, volatile, whatever, for me to recommend it as an official setup. But I did put it in as an honorable mention, and I put the parameters in there, and I said, Dave, I think I'm going to take that. It's too risky to just put out as a blanket recommendation, but I think I'm a big boy. I think I can handle it. I think I'm going to take it, and I did not take it. And on Facebook, I noticed somebody's like, hey, Dave, thanks for the F cell. I'm like, oh, geez, I forgot to take it. So it happens. And that's another one of those million little things. And I know I'm digressing a lot here, but that's how I do. Anyway, you can see long story of this, again, it gapped down, a little fake out, and then came back in. So I'm like, okay, so now that I have the fake out of the way, I can put in an entry above the market plus a little wiggle room and hopefully avoid getting triggered on noise alone. You can see it'll trigger here. And I thought one point like Christopher was a good round number that would work in this particular case. So broadcast that up from the entry. My initial profit target is 1 point higher. Now, it did come in initially, as you can see here. And I was watching a 30-minute chart, and it's a little bit easier to watch on a 30-minute chart. It's much harder to watch on like a 5-minute chart. So as I said earlier, I went from 5-minute charts, and now I've made it all the way up to 30. And it was a mistake I made a couple of years ago. I was watching E-minis on a 5-minute chart, and somehow I accidentally changed it to a 15-minute chart. And the next week I come in to trade, and there's no trades on Monday, no trades on Tuesday. I'm like, what the hell's going on? And then on Wednesday, I had a setup, and I took it. My ADD kicked in. I thought it was a hawk, but it's a squirrel. Squirrel. Anyway, so I'm like, what the heck? I'm not getting any signals. And then I took the trade, and it made money. And then no trades the next day. And I think on Friday I had one more trade, and it made money. And I'm like, well, this is weird. I'm not getting a lot of signals, but I tend to be more profitable in the signals. And then I realized that, oh shoot, I accidentally changed my time frame, but it was a learning experience for me. It's like, well, maybe that's what I need to do. Anyway, it hit the IPT. It took a little while to get there, but it did hit the IPT by noon. Now, this is an automated trailing stop that I had in place, okay? So I think the round numbers, the entry was 29. I might have got in at 29.02 with slippage on this particular trade. So that's 1 point higher would be 30. And there's only 200 shares, just kind of like just modeling it out for you here. And that's why I did just 200 shares in a small account. And you will, this stop will automatically trail higher. So this started trailing higher right here. This actually began to come up a little bit, and it keeps coming up. And when you hit the initial profit target, which is 1 point higher, then your stop is 1 point below. And that's the beauty of these automated trailing stops. Now, at this point in time, there is absolutely nothing to do. Now, I almost bailed out on it, but I said, you know what, Dave, I'm going to hold it to the close because that's what my plan was, to have that automated trailing stop, keep me in, have the initial profit target, take me out. I actually do put a limit order in these cases. And in a case like this, I'm just thinking out loud here, this became a 100% hands-off type of trade. Now, one thing I was thinking about is yesterday I was extremely busy. I was working on a Substack article. I was working on these slides. I was watching the markets a little bit, of course. But by being busy, and as I often preach, busy traders make good traders. By being busy, I was letting this thing unfold. Also, by holding myself accountable, because I put the trade out there and said, okay, well, I took the trade. Here we go. Let's see what happens. I didn't want to micromanage it, and I wanted to be as hands-off as possible. So this is, as I'm just kind of seeing it now and thinking about it, this is probably as pretty as it gets. Now, I would have liked to make a lot more money on the trade, but it was profitable overall, and it was completely hands-off. I placed one order, and I got triggered, and then I placed 2 orders. Okay, 100 for the IPT, 100 for the trailing stop. So anyway, trailing the initial profit target gets hit. My stop automatically is now at break even, and then all I have to do, I know easier said than done, is just sit tight, wait for the end of the day. And if I'm not stopped out, exit near the close, and that's what I did. So you can see down below there's a trades 29.02, 30.02 IPT, and then exit around the close. Unfortunately, we had a nice rally late in the day, but then it came back in, and I just wanted to follow the plan throughout. And it's like, well, I was a little tempted later in the day, like, oh, geez, it's 10 minutes before the close, and this thing's looking pretty good. Might want to bail out. It's like, nope, let's just see if it keeps on going. And sometimes these things can get squeezed at the end of the day and go 3, 4, or 5 points. Not all the time, but every now and then. Or not often, I should say, but it does happen. Anyway, so $100 plus $67, $167, better than a poke in the eye on this trade. And obviously, I did take it across multiple accounts. So if you have a bigger account, you can put on more shares. If you're newer to trading, then trade fewer and fewer shares until you get the reps in, okay? If you can make money with a small amount, trading small size, and be consistent, then all you have to do, I know easier said than done, but all you have to do is slowly increase your size over time. All right, any questions or thoughts on that? I'm going to blow through this TFM system pretty quick. I have a complete playlist. If you look at the methodology and action playlist on YouTube, youtube.com/Dave Landry. I'm trying to remember my channels right here. And then if you look at the playlist, there's one called methodology and action. And you can go in and see the first part of the weekend charts that I do. It's pretty much the weekend charts, actual charts for the week, okay? And you can learn a lot more about this system, but the rules are basically you're gonna exit when you close 10% or more away from the 50-week closing high, and you're also below the 50-week simple moving average. So this is a weekly chart, and we just had another buy recently, and I talked about this last week or week before. I'm not a big fan on buying on weakness, although I didn't realize this when I developed the system. A parameter that I probably should have added in, or another rule, was that it has to also close above the open for the week, or maybe even close higher for the week at the second bar. Anyway, so I didn't like that signal because it was, you were buying on weakness as opposed to buying on strength, and I prefer buying on strength. I don't mind paying up for price. I'm not looking for a bargain, but so far it has worked, and it did turn back up after that. So again, you'd be buying on the weakness as opposed to strength. And I guess another way of looking at it would be, it's like, okay, I'm not going to buy on that, but when we close above the highest close of the setup bar, that might be a good place to enter, which would have been right there around 6,000. All right, I know I just blew through that, but believe me, there's lots of videos on that. There's also lots and lots of videos on Landry 100. I'm getting a lot of questions on it, which is exciting for me. And maybe I'm going to flesh this out into something more and more. And now that I know that people are paying attention to it, I'm finding myself working harder and harder on this list. But the bottom line is, so far, this is just a proof of concept, okay? And what I'm trying to achieve here is to show me the money flows, to show things like momentum begets momentum. You can't just buy all new highs, right? But if you buy enough new highs, you're going to catch some really big trends. And we had one I showed last week or a week before that made it as high as 1,000% move. It was the first 1,000% winner since I restarted this Landry 100. Momentum also ends badly. That's something that people don't talk about a lot. Is in the end you give up some of that trend, and it could get whacked. The other thing that came out of this, and I don't really have fantastic tracking. I have live tracking on an individual stock basis, but years ago I had live tracking on the whole portfolio, which was really cool. And one of the things that came out of that is I learned that the lists would get hit. Momentum, these go-go stocks, these high alpha stocks, if you want to call them that, and momentum stocks would get hit really hard, even though sometimes like the S&P 500 would be making marginal new highs or even all-time highs. And then 2 or 3 days later, the S&P 500 would just get absolutely creamed. So my list would get hit like 3 and 4 and maybe even 5%. It's like, oh, good Lord, this thing got creamed today. It's like, but the market's doing okay. Is it that odd? Well, that's just one of these little nuances that came from it. So it's, I'm not going to say it's a lot of work. It's a little bit of work, but the payoff I'm beginning to see is pretty good. Now, ask me again in the middle of summer if everything gets all choppy and ugly, whether or not it's worth doing this. But for now, it seems to be a really good experience. So you're going to buy new highs, okay? That's the only rule. When I did this before, so far I've been doing this about a year now with this new rebirth of this, if you want to call it that, or reboot, I should say rebirth. That sounds kind of weird. Reboot, but so far I've been able to buy all 52-week new highs. Now over time, especially if the market's choppy or if we go into a little bit of a bear market again, then I'll probably have to drop that down. I seem to remember buying like 90-day highs at some point in time, but right now there's enough all-time highs to buy this, or at least 52-week highs. Now I'm selling weakness, okay? So if stocks get creamed in the list, I start taking them out. And then the other thing that I will do sometimes is if there's a lot of stocks I like that are making those new highs, I will displace, so to speak, some of the underperformers in the Landry 100. Or by underperforming, they might actually be positive, like a 2 or 3 or 5% gain, whatever the case may be. But I'll replace them because there's something that's much hotter that comes along. And one way of looking at this, it's like I'm doing a continuous window dressing, okay? So window dressing is you put your stuff up front. It's like you're trying to draw people into your shop, so you put something exciting up front. And window dressing, as it applies to a portfolio, is, let's say you're running a mutual fund and you're getting ready to report all your positions and everything, and you don't have, what's the stock that's at a new highs? So Netflix is usually a good one. Netflix is at new highs now. If you don't have Netflix in your portfolio, then maybe you need to put Netflix in your portfolio, or to a lesser extent, maybe some momentum stocks like these small scale nuclear power stocks or hot stocks or AI or whatever the case may be. If they're making new highs and they're hot, you better put those in your portfolio. But this is like a constant window dressing. I'm constantly trying to make the portfolio look as good as possible. Now, I did get asked some questions this week on money management. There's no money management again. And I know I'm repeating a lot of things here, but if you go in and watch, again, the playlists on my YouTube channel, you can get a lot of this information out. Now, I did experiment with it, and one thing I did kind of think about, because I had one, it was JYD, and I actually did take that trade personally when I was working on this experiment, is it hit 100% and I took off half, and then it imploded and lost like 90% afterwards. So I think if you were doing this with real money, you would definitely have to tweak your money management a little bit. I'm not saying that you should use like a tight stop or anything, because a lot of these stocks are going to move around a lot because the momentum is kind of crazy. And that's another thing that comes out as you watch this momentum unfold. But I do think that if you were using real money, at the least, you probably want to sell a half at 100%. Anyway, so that's just the bottom line there. And one thing I've been showing quite a bit, even during this downturn we had not too long ago, speculation was still pretty much alive and well. The list did drop down to about 80 or so, but there were still quite a few that, if you look through this list at the open dates, you can see were started long before the market had its slide. There's a couple in here you can see that go back to January. Here's one that's back to April. So some of these big winners in here have been on for quite a long time, and they were able to ride out, or we were able to ride out, having a look at it, the big slide. But anyway, this one was up 1,000 a couple of weeks ago. It's since pulled back a little bit. I haven't taken it out because even though it's a very deep pullback, it still looks pretty good longer term. And when I took the snapshot, it was up 713%. So I zoomed in on some of the top ones. You can see these are pretty big gains. And again, this one right here, NAC, that's a silver stock, that goes back to December of 24. I don't know what the oldest one is. We'll take a look at that in just 1 second, the live charts. I'm kind of in the early phases of starting to do this again. I found some old presentations from like 20 years ago, whenever I first did this Landry 100, and I saw these cool charts and all. I've completely forgotten how to do them. And I realize that's hard to read, but I can upload this to a YouTube post, Twitter, or X, and also I think I put it on Substack already this morning. So if you're looking for that, you can find it. DaveLandry.substack. Anyway, I'm not going to spend too much time on this. Like I said before, momentum ends badly. Relative strength in a bear market is okay, but eventually they find you. So if you do go in and look at some of these older presentations, when we were in a bit of a bear market recently, there were grocery stores in the Landry 100. Well, that's kind of a defensive type of area because people still need to eat. But remember, eventually, and they eventually came out, because when a market begins to slide, they eventually find all stocks. So there's always a bull market somewhere. It's not necessarily true. That's one of the myths about Wall Street. But yeah, it's a great way to find where the money's flowing, as you can see in that pie chart. Let's just go back to that just for a second. So just real quick, you can see gold is the biggest slot here, and then it's industrial metals and mining, uranium, platinum, silver. That's all in that. So I think uranium could offer some opportunities really soon. Platinum is going straight up, so maybe some platinum stocks might be worth a shot. And there's only one in here, but it's kind of interesting. There could be more really soon. The small scale nuclear production. Okay, that's we were in a hot one a while back. NNR, I think, that just went up like crazy. Unfortunately, momentum ends badly and came back in and knocked us out. But we did make a lot of money, at least initially, on that one of the bigger winners. But it looks like that's coming back. But anyway, you can see again the big slice in gold, big slice in industrial metals and mining, and then software, pretty big slice. If you software overall about 13%, and then insurance, believe it or not, there's a few insurance stocks in here, some medical care, and some very small slices in energies and different other little miscellaneous sectors. But it does help to see where possible new money could be flowing. There's one coal stock in here, so it's a great, again, exercise, if I say so myself. Anyway, cash is treated as an asset class. So like a while back, I think I was down to about 77 out of 100. And so those 23 slots were holding cash. Okay. And this Landry 100 could end up being like 20 stocks or whatever if we got into a longer term bear market. All right. Any questions at all? I know I kind of went quickly today because people who show up every week, which I thank you, are like, Dave, come on, kill us. But you got to realize I get these questions every week and I'm trying to cover them best I can. As I've been saying for the last year or so, whenever I started this presentation series, everyone thinks that something's going to happen and it's going to click, bam, I get it. Okay, I fully understand this trading. You know, here's the thing. If you ever feel like that, you're going to get your ass handed to you fairly quickly. And I was doing some cleaning up an article actually yesterday, which I'll put out soon, maybe early next week. And it's I forget the name of it, but it was like something like do these 5 things in your next trade. And one of the things that was in there was like when you think you have it all figured out, it's usually right before, again, you get your ass handed to you. And I can think of 2 specific situations, and there's been plenty of them, believe me. But in 2 situations, they had 2 people who absolutely printed money. And in both cases, I said, pay off your mortgage, okay? Now you have a free place to live. Keep a little money out and trade that money. And if you're that good, do it again. And in both cases, they were like, well, I'm gonna wait till I get another 5 million, then I'm gonna do that. I'm like, okay. It's like, right now you're feeling pretty smug. You might just want to have a free place to live, because if you blow up the rest of your account, hey, you got a place to live, just saying. Anyway, everybody thinks it's gonna be a big epiphany. Usually it is not. It's really a million little things. And this week is so, because I was like, what am I gonna say? What am I saying? What am I gonna say? And then I saw a mistake I made. I'm like, well, that's my million little thing for this week. And I thought, well, this is such a little thing, it's not worth even mentioning. It's like, well, wait a minute, Dave. It's a million little things, and it really is. And another thing I was thinking right before it went live is, it's a million little things in life. It's a million little things in business. Just easy decisions, hard life, hard decisions, easy life. Just if you do something when you have to do it, then down the road, it's not going to be as bad, or you won't have to deal with it. But tiny little things, showing up, get to the gym every day, do just a million little things to be successful in trading and life. Anyway, this week, number 768,254, unless it's a crazy ways away, and I'll show you an example of that, work to try to survive the 30 EMA. Now, here's the example. About a week or so ago, or 2 weeks ago, I bought this shitcoin, SHYT, and it did okay the first day I was in, and then it starts to implode. And I seem to remember, and I can go back and look at my trading journal. I don't really journal these crypto trades, and I should, so a million little things, right? So journal all your trading is what maybe next week we'll talk about that, a week after. But anyway, I remember thinking, you know what? These altcoins aren't doing that well. Bitcoin's not doing that well. I'm in a bad mood for whatever reason, or what's going on. And maybe some other trades in stocks that went wrong. And these are extraneous influences. We talk about that a lot, I should say. And I said, I'm just going to get out of this thing. And so I got out, and of course it reversed shortly after I got out. And when I did my relative strength sort on the altcoins, this thing came up toward the top of the list. And I'm like, oh. And you can see this is where I got in. This was the initial profit target. And this is where I decided to bail out. It's like, this thing's failing, no need to stick around. And so it turned into a losing trade, and this should have been a winner, and I should still be in it, okay? But anyway, you can see it wasn't that far away from the 30 EMA. So at the least, I should have said, well, Dave, let's see if we could survive down to the 30 EMA. It's only like a penny more in this particular case. Maybe put a hard stop below that 30 EMA and go about your life. Just kind of backing into something here. The beauty of a hard stop in this particular case is that your trading becomes hands-off, okay? So that trailing stop we talked about earlier, and it's kind of cool if you think about it. It's like I'm super proud. The more I think about it, the prouder I am of that OGRe trade, not because I made a lot of money on it, $167 here. I might have made a little bit more somewhere else, but I'm not enough to brag about, believe me. But it's like, you know what? That was pretty easy trading. It's like, just don't look at it. It's like, put it on and don't look at it and let it go. So had I just put in a hard stop below that 30 EMA, in this particular case, I'd still be in this trade, probably. Now, this is the aforementioned TFPM, and you can see that our stop at break even is actually below the 30 EMA, so that's a good thing. So I wanted to show you this one because you don't necessarily want to be at the 30 EMA if it's fairly close to price and you're trend following, okay? And if your system has your stop below that 30 EMA, then that's great. But my point is, if you don't have a stop in place to begin with, the 30 EMA is a good place to start. Try to get it below that 30 EMA if you can. Now, I just grabbed a random chart, which happened to be up on the screen at the time, and this is the S&P 500, and you can see the Landry light down below. And look at all this trading down up from around 6,000 all the way down to 4,000 handle, I guess 4,500 or so. And that was all contained, so to speak, with Landry light below the 30 EMA. So you could see you had like 50 bars down here where the highs are less than the moving average. Now, if you take a look at the distance at this particular time, this distance was very, very, very extreme. So let's say you were short this market, you probably wouldn't want to have a stop way, 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 way up there. But my point is, once you get into a longer term trend or even a shorter term trend, if the 30 EMA is not that far away, then try to at least survive the 30 EMA, okay? So it's not a hard and fast rule is the point I'm trying to make, but it's kind of a general rule that can help to keep you on the right side of the market. So all you have to do is look at the Landry light in this particular case, and so far, we've been above that 30 positive Landry light. Today will give us one more day, so that'd be 30 days that we've been with positive Landry light, lows greater than the moving average. When a market trend, something as simple as this can keep you in the trend. So that's kind of a short, sweet lesson, but work to at least survive the 30 EMA. All right, I'm gonna go ahead and shift gears here and get the crypto up and running. So just real quick, like I said earlier, I did upload my pie chart to Substack. So if you want to go in and grab that, a little bit easier to read where the everything is. And I really need to work hard to keep this updated because that could be really, really cool. Okay, this is the only altcoin I'm currently long. And I think I talked about this one a few weeks ago. And again, sometimes I wouldn't buy stocks that are making new highs unless you could do like 100, Landry 100. But if the market is doing really well, and when these altcoins are running, for instance, you have a bull bear cycle. I just said bear. People are like, you don't sound like a coon ass. Like, listen long enough, it'll slip out. But when the bull bear cycle is pretty quick in these altcoins. So you get this amazing bull cycle that comes through every now and then. You can go in and just buy the ones that are making new highs. So I bought this one, and then syrup, I just showed you that I stopped out of. But you can see I'm using a 20% IPT, so it ran up to the IPT, and now it's kind of meandering around, and my stop's at break even, so we'll see what happens, and that's well below that 30 EMA, so that's a good thing as far as that's concerned. Bitcoin, good bellwether to watch, obviously. here's our old highs, and we're just kind of right around those prior peaks. I'd like to see us break out and not look back. Seems to hit a little resistance every time we get there, and that's last time I think it was for early adopters who had tons and tons of money, and they figured, well, it's now worth $100,000. I shouldn't admit this. Years ago, I took some Bitcoin profits because I thought Bitcoin was, I confused the issue with facts. I thought Bitcoin was just a fad, you know, or maybe or whatever. And I thought it was kind of ludicrous. So I took some of those profits. They were still in Bitcoin, and I bought some physical silver with them. And I was looking at that physical silver in my spreadsheet yesterday, and it's going up like 30% or whatever the case may be. And I'm like, wow, Dave, you're pretty smart. That was a pretty cool thing to do. And then I didn't realize I'd forgotten that I'd spent some Bitcoin on that. And I looked at the amount of Bitcoin that I had spent to buy the silver, and it had gone up like tenfold. So it's like, so that was kind of an interesting type of the thing that happened there. Anyway, I don't know why I digress, but don't confuse issue with facts, I suppose. But I'd like to see us hit some brand new highs and keep on keeping on. Let's take a look at the strength, the stronger pairs. And so, like I just said, sometimes if they're banging out new highs, and a lot of them are moving, and right now I'm not really seeing that at the moment. The problem is I'll do this for 3 or 4 or 5 days in a row, and there's nothing worthwhile, and then I won't do it, and then all of a sudden I'll see a few of these take off. Let's just see what that syrup is doing. Syrup. That's painful. Look at that. Just came right down to that 30. I was gonna give it one more little kiss goodbye before it took off. All right, anybody want me to look at any pairs? Yeah, Frenchie, if you have some ideas on how to track that Landry 100 better, let me know. All I'm doing now is I'm letting Telechart track it for me, and then when I take them out, I put them into a spreadsheet, the ones that are coming out. So if you look at the ones that come out, that spreadsheet's pretty much abysmal. But the beauty of that is you get 1,000% gainer, and for instance, 1,000%, $10,000 per slot. So that's what's that times 10? So that's like 100 grand. So that covers, if you were to take it out, obviously at 1,000%, but that covers a lot of sins, so to speak, and that's where it's going to pay off with momentum, because eventually you're going to catch enough of those big winners. But it's I haven't figured out an easy way to do this on a private trader level. I suppose if you had an extra $1 million laying around, then just put 10,000 in each one and let it run, and then of course actively manage it. All right, let's shift gears. If there's no questions on crypto, we'll go ahead and shift gears and we'll hop into stocks. I'll spend a few minutes on the overall market, and then we'll answer your questions on individual stocks if you have any. Okay, so let's go just real quick to the Landry 100. Let's just see what happens there. Landry 100. Okay. So let's take a look at the tracking dates. Let's see what the oldest one is. Okay, so it was that NAC. So NAC is the oldest one in the list, and that's from December of 24. So this will be fun. I know you're going to party with me, but this will be fun to see how this shakes out over time and see how long we can hang on to these. But you can see some pretty decent gainers in here across a variety of sectors. I try not to be too judgmental as to what sectors I do or do not put in here. And then I also let it kind of widen out. Like, notice there's a lot of goals, over 13 goals, I think. I allow allow it to stack up quite a bit. I think in the real world, you'd have to maybe limit that to 10% of the portfolio. And I'm sure there's some portfolio managers out there just rolling their eyes like, give me a break. That's ludicrous, right? But this is all just for fun. I know you're having a blast with it, right? Anyway, let's take a look at the overall market and see what's happening and drill down a little bit. S&P 500. An okay day so far, up a little bit. We still have a little overhead supply to get through. I'm not a huge fan of these V-shaped recoveries at high levels, as I've said ad nauseum, because by the time the market gets all the way back to its old highs, it's a little tired. And it's also human nature. And I did a presentation a while back, although he's been vindicated since, but I did a presentation a while back where I talked about someone who sold the Russell 2000 right around here. And I explained to him that you don't want to sell things when he had held it for years, right? You don't want to sell things to get out. You don't want to trade to get out at break even. And take that back. He held it since he bought somewhere around this peak, and he's been waiting for 4 years to get out of break even. Well, that's a loser strategy, and I know I beat him up a lot. He looked pretty smart with it though, but that is human nature to try to get out of break even when that happens. Anyway, that's a Russell 2000 getting whacked a little today, coming back a little though. Lots of overhead supply to deal with there, so it's just kind of all over the place. It's a mess. Leave that alone for now, at least. Nasdaq Composite looking pretty good, not too far away from all-time highs. Still has a little fluff to get through. Remember, again, this is not mumbo jumbo like the aforementioned gentleman. He was looking to get out of break even, so people will be looking to get out of break even, likely, or if they haven't already done so. Hopefully, they've already done so to clear out that trading. By the way, when you're overbought at an inflection point and nearing the all-time highs like this and bumping up against resistance too, a down day is going to look pretty ugly and an up day is going to look pretty good. So be careful not to get too caught up. Right now, the trend does remain up. Take a look at your 30 EMA Landry light. Look at your 10 simple Landry light, okay? And then even look at your longer-term moving averages. This is the 200-day moving average here. Here's your 50. Is that right? Is that the 50? Yeah, that's a 200. So is it 200 above the 50? That's crazy. Huh, that's interesting. But this one should catch up fairly quick, especially with the drop-off effect. Okay, let's take a look at gold to commodity. Gold to commodity, not a bad day there. It's chopping around these high levels, but it looks like it still has a potential to go higher. It's just kind of this big thrust, consolidation, 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 and then possibly next leg out would be higher. Gold stocks looking pretty good just off of these multi-year highs or all-time highs. I think all-time highs, at least from what I could tell. Let's take a look at the weekly there. Yeah, not quite all-time highs. I didn't think they were, but close enough, right? And if you think about it, wood stocks are probably still in this index from a long time ago. So for all intents and purposes, this is all-time highs. A lot of areas still have a lot of overhead supply to deal with, a lot of trading above. And again, people might be looking to get out at break even. This is robotics and AI. Cybersecurity, this is a V-shaped recovery. So far, it's breaking out, though. It's kind of a honey badger type of market. It doesn't care about that V-shaped recovery. So if that keeps on keeping on, maybe there'll be some setups there fairly soon. Take a look at defense. That's another one of those honey badger areas. Doesn't care, right? V-shaped recovery at high levels, but it kept on keeping on. So I've gotten to some discussions with people about, Dave, you worry too much about overhead supply and V-shaped recoveries. It's like, well, I think you have to consider these things when you're trading. Yeah, market could do whatever it wants to do and believe in what you see and not in what you believe and all these other things that I preach. But what you might want to do is you might want to pay attention to them, and if it breaks out and breaks through, then by all means, be a trend following moron and play some pullbacks along the way. But I think it's stupid, not stupid, but it's not smart to not pay attention to those type of things. Just real quick, the rare earths and platinums and those industrial metals and minerals doing really well. Look at platinum, just melting absolutely straight up in here. Silver's doing well, not as good as my Bitcoin would have done if I'd have just held on to it. And keep in mind that's a small experiment. It wasn't a whole lot, but it's just kind of an interesting thing at the time. I thought I'd be cute. You know what? A million little things, number 789,644. Don't be cute. Silver, a little bit of a bounce today. Looking pretty good, though. Kind of straight up as of late. So don't feel too sorry for me because I sold my Bitcoin years ago. A little bit of Bitcoin, not much for silver. What else is happening? Broker dealer, another one's V-shaped recovery deal. So the point is, we're not really out of the woods just yet. I mean, you're never out of the woods with the markets, but it's not like we're looking fantastic longer term. But yes, everything has improved. A lot of areas. Again, though, take a look at biotech. Lots and lots of, you guessed it, overhead supply. If there's any stocks you guys want to talk about, go ahead and punch them in now because we're going to wrap it up here in just a few minutes. Getting back to those rare earths, there's uranium. Look at that. Break it out to all-time highs, or not all-time highs, maybe. Let's see. All-time highs for the ETF, at least. Yeah. No, it's still got a ways to go to get to all-time highs, but certainly good enough for this cycle to look pretty darn good. We could see some setups here fairly soon. Semiconductors doing pretty good. We've made it almost through all of this fluff here. So far, so good there. You know, I mean, I like to see all-time highs and have it not look back for a while. Software, another one's V-shaped recoveries. You guessed it, at high levels. But so far, so good there. It looks like it's pushing into brand new highs. So that's a good thing there. A little ways to go, but getting there. Mags still has some overhead supply to get through, so that's a concern. So overhead supply is still there, right? Was this palladium? Palladium not quite as impressive as platinum, but coming back in a little bit. What else? Cloud computing, you guessed it, overhead supply to deal with there. Energies have done well as of late, but look at all this fluff they have to get through. So that's certainly not a good thing there. And finally, financials, you can see stalling out a little bit at the prior peak in here, nonetheless V-shaped recovery type of problems there. All right, any questions, anything else you guys want me to cover? I'll give YouTube a second to catch up. So while we're in impasse, obviously I want to thank all you guys and girls for attending. I appreciate taking time out of your busy schedule. Anything unanswered, Landry.com. Everybody have a great weekend. I'll see all you guys and girls that are here today. Most everybody here today is also in Facebook, so I'll see you guys much sooner. But everyone else, have a great weekend. And again, no show next week, but week after, we'll kick it into gear, God willing. Everybody, again, have a great weekend, and may the trend be with you. Thank you. Oh, you're welcome. You're welcome. Thank you.